Good morning. Today is March 29, 2019. My name is Tania Cruz, and I'm a tax senior at Salmon Sims Thomas, the CPA firm here in Dallas, Texas. Let's begin with some state and local tax updates from CCH Tracker News. First off, we have New Mexico legislation that has been introduced that would, among other changes, require corporate income tax combined reporting and implement market-based sourcing. This would also broaden personal income tax brackets and add a new top rate of 6.5%, whereas the current top rate is sitting at 4.9%. If enacted, these changes would be effective beginning in tax years starting on or after January 1st, 2020. In Kentucky, a bill containing marketplace economic nexus provisions and sales tax provisions has passed the Kentucky House. Under the current law, a remote retailer must register and collect Kentucky use tax if in the previous or current calendar year they made at least 200 Kentucky sales transactions, or if their gross receipts from Kentucky sales exceed $100,000. As passed by the House, this bill would expand retailer engaged in business in the state to include remote retailers who meet either threshold and sell through marketplaces, and also require registration and collection by marketplace providers who meet either threshold from their own sales or from sales in their marketplaces. In Minnesota, Governor Tim Walz announced a budget proposal that includes an expansion of the working family tax credit, increasing the subtraction for Social Security benefits, federal tax law conformity to new foreign income provisions, retention of state personal income tax deductions and exemptions, property tax relief created by modifying the sales tax exemption for local governments and nonprofits purchasing construction materials, a 20-cent increase in the gas tax, and a $50 per acre property tax credit for farmers who provide buffer strips of land near public waters and drainage systems. The update in Wyoming is that a sales and use tax exemption has been authorized for broadband internet service infrastructure. What this means is that sales of equipment to a telecommunications service provider, a video programming service provider, or a provider of internet access is now exempt as long as it is used to provide broadband internet in an unserved area. The term equipment would exclude property sold or leased to a customer of the provider. This exemption would terminate July 1st, 2024. Thank you for tuning in. We hope you enjoyed this video and that you'll watch our next month's update. Thanks again.